Hey, welcome everyone. Tom here from Park Avenue Trading, your chief dealer, keeping you sane in these insane markets. It is Monday morning, 7:45 a.m. on October 21st, 2024, and welcome to the Park Avenue Trading Show. Anyway, no video of me today because in reality, you don't want to know. I'm getting ready to take a shower in my bathrobe, and I got my furry sweater on, and I don't want you to see that. You know, what was it? SpongeBob was eyelash sweater on. You don't want to see that eyelash sweater. I got more hair on my shoulders and chest than I do on my head, which is ridiculous. But anyway, as we are looking at, we are starting with dollar yen today. Dollar yen has been basically in a channel, and I have the channel marked by this upper limit and this lower limit right there. There is support right now at 159.50. It's got a hold above 159.50. If it breaks down below 159.50, you could expect it to track back down towards this low of 149, say the figure, and then there's main support on the day at 148.80. In order for dollar yen really to continue higher today, we got to get above that 150.35 level. It's been kind of quiet the last, say, week or so. You know, we've been in this channel. I did the weekly analysis, but that 149.20 is a really important level that we had from the week before. It's still there. You know, we haven't gravitated very far away from it on either side of that point. So it's still there, but for the day, 149.50 is really an important support point for dollar yen. So I would think that if we can get back down towards this level, even pierce it, I would start to look for in this area right here. I would be looking for a signal, and I'm going to go over some price bar signals that I actually use and it actually goes on a lower time frame. I'll drop down to 15-minute, 30-minute to find one of these signals. It's a very simple signal. And I'll go over those. But whatever system you have, you could even use trend degrees at that point, which I gave you the link for in the Fibonacci video series, where you can apply trend degrees and look for a level that you could get long at with a stop level below it using both sides of the trend degree. So that's a good way of doing it as well. And it's a mathematical way of doing it. So dollar yen right now is showing slightly bullish tone. I think we could get a pullback back to 149.50. There you'd have to look for a decent buy signal, get involved, try to get through this 150, whatever this high right here is, 150, like that area right there, 150.10, going up to 150.33. If we break 150.33, dollar yen is on its way to like 151. Okay, if we break below 148.80, there's another lower level at 148.25 level. That's another level of support. I really don't see it doing that today, but it's Forex. Who the heck knows? It could do anything it wants to do, right? So market is the judge, jury, and convictor. So all right, so let's move over to British pound. All right, so sterling dollar today. Sterling dollar has been basically in a neutral state to bearish tone. Really on the day, let me check out some numbers for sterling dollar for you guys and gals. Can't be sexist, Tom. Can't be sexist. They're all really good women traders. Very good women traders. As a matter of fact, sometimes I'm a little jealous of them. Hang on, let me get some numbers. Okay, for sterling dollar, we really have a support point that moved down to 129.60 right there. That's more important than this slight level at 129.73. Now, on the day, we have like like that fib level is an important fib level. That's coming off of a leg move. That's a bigger leg move, and it's the 618 retracement from a recent high, and it's off of a 4-hour chart. So it's coming in on my 1-hour chart as a 618 retracement. And that's an important level. It needs to hold above this level of, say, 130.10, 130.05. If it breaks through 130.05, it's basically showing weakness that is once again tracking down to this 129, say 70, 60 level, like that. If it breaks 129.60, it's the 129 the figure. Now, it does need to hold this level right here for the day. Then what it needs to do is it needs to break this high right now, and then we have that massive crazy level at 131.05 up, right up in here. And there's a slew of resistance above 131.05. We got like 131.35, 131.65. If we could finally break through that, and I'm not talking about, I don't think it's happening today. But then again, like I said before, this is Forex. Anything can happen. If we can get through that 131.65, we got the 132.25 behind it. So right now, sterling dollar is coiling. It is in a slightly bearish tone. It just needs to get above this level and hold this level for the day. Now, I am not too much of I was a sterling dollar bull. I would really look, if I was going to buy it, I'd be looking down in this level here. This would be the buy zone for me, down in here, and I would look for like a Larry Williams oops trade. Now, what's a Larry Williams oops trade? Well, what Larry Williams used to do was, let me get an arrow here. What Larry Williams used to do is he would say that if sterling dollar basically broke down through this low, maybe I used the 1, 2, 3s. If sterling dollar broke down through this low, let's say it came down to here, and then it broke back up over it, he would buy it. That would be oops. Like, because what he would do is he would go short on the break of this bottom. And once the marketplace, say it came down a little bit lower, but then it broke back up, he would consider that totally a false breakout, and he'd reverse the position. Larry Williams, oops. I love that trade. I think it's a really cool trade. There's very little risk in it, and it works. When it works really well. When it doesn't work really well. I mean, it really fails. So therefore, it's really telling you the market direction. So there we are with sterling dollar. Let's move on over to good old sterling yen. All right. Well, I got a lot of stuff on here. All right. I measured this last leg. And if you notice, the marketplace came down to this low right here, right at the 0.382 level. Of actually, it really is like the 0.618, but because it should be reversed. But here we are. Like, this is like an important point in sterling yen right now, 194.55. So let me see what else I got here. Since that's past history, it's like 195.10, 95. Let's say 195. The figure is an important level to hold today. Okay, and where do we have to get up over? Well, we're over the 195.10 right now. We went up to 195.40, or the high so far has been 195.40. For me, I really don't like that. I would be much more comfortable with this marketplace since it broke the 195 level, that it traveled to at least 196. Like, it attempted to break this high. By it not like doing it is telling me that there are some sellers in the marketplace. So if we break this 194, say 70 level, we're heading back down to, wow, the only point I got is like 193.70, which is a very positive. It's a very strong low. But let me see if I got anything else. I'm gonna have to use like trend degrees with this. Hang on a second. Well, since I opened this up to you guys, and you can go to the site, just go to the Fibonacci video, and you can get a link to trend degrees. So I'm using the price high at 196.04. I know, like, if you notice, man, we went right down to that 8 degree. That's an important degree. So the next level of support down is 194.29. Then I told you I had 193.70. That's a volatility level, but there's an extension level at 193.42. So those are the levels of support. Now, if the marketplace came down to like 194, say 30.29, and went a little bit lower, then I'd be saying that the only way it's going to recover if it gets above 195 again. So it would be showing like weakness. So those trend degrees are important. Since I let the cat out of the bag, like I said, I use them to find other levels of volatility. So, and you can too. I mean, I opened it up for you guys to go check out and play around with. And well, what about the upside? You know, like, what do we have to get through if I'm just using trend degrees? Well, the low I got is the recent low, 194 point, let's say 70. All right, and let's see here, 194.70. And why isn't my trend degree working? 94.70. I think it's because this thing is on here. Hang on. Okay, a lot of people are using it, and therefore it clogged up the cache. So if we came back down to this 194.70 level, we'd have to get through like 195.40 again to basically say that we're staying within the range. So right now, sterling yen is in a slightly bid tone, and that all has to do with dollar yen. Nothing to do really with sterling dollar, because sterling dollar has been a dog with fleas. So if dollar yen starts to rally and sterling dollar gets pinned, stays at this level, say 130, say 15-ish, and dollar yen can break the 150.33 level, obviously sterling yen is traveling higher. Right now, the resistance is really the top at 196.04 right now. So if we break through 196.04, that's a positive for sterling yen for the day. Let's go on over to euro yen. All right, euro yen. Let's see, what do we got here? Since I do this on the fly, I'm sorry. I'm doing it as I'm doing it for myself. I should actually like do it before, so you guys don't have to hear me just bantering on and on. 162 the figure, 161.84. It's channeling as well. I mean, right now it is this. It's this against this is a this was a fear of missing out type of thing. So I would go down to really that low. This is the channel right now in euro yen. The important point really on the day right now is 162.50. Wow, that's interesting. 162.50. That's the important level on the day. If it breaks down below that, and we're very close to it. Let's make it a different color. Let's make it that color. If it breaks down below that, we're tracking back down to the 162, the figure level. It has to get above 163, the figure, in order to show strength, and then it's got resistance at 163.50. Or you know, you could look at price action if it breaks through this top part of the channel itself. If it breaks down through 162.06, We got that 161, right? You know, this low right here, which I called a fraudulent low before, but it is a low. But what I meant by fraudulent before is that this was like kind of a fear of missing out move. This was traders getting in late. And now look here's the Larry Williams oops, right? It went down through, and this is the old pivot point right here. Came back up through it and then made a nice high, almost matched that high. Almost came up through this point and almost matched that high, and then reversed back down. So this is the channeling that's occurring in euro yen right now. And I really do think that this has a lot to do with what's going on with the U.S. and the election, and people, you know, trying to figure out like who's going to win this thing. And, you know, big boys right now are on the side, and they're making sure that they have the right data to get positioned correctly. And here's the funny thing about it. They will fake a position. So in other words, let's say, for instance, they're accumulating dollar yen. And I'm making this up, you know. So they're accumulating dollar yen. They've been buying dollar yen, and they've been buying a lot of dollar yen on dips. And they're thinking dollar yen's going to 165. And again, I'm making this up. But what they'll do is, let's say, for instance, they have good data on who's going to win. I'm not going to get into politics, but there's one candidate that's definitely for a strong U.S. dollar, and there's one that doesn't even think about the ramifications of the dollar losing its reserve currency status in the world. So if that one candidate wins, what they'll do is, or they think that candidate's going to win, they will come in and massively sell off dollar yen. In other words, they'll come in with big orders to hit dollar yen to get smaller traders, us, and other smaller banks that have stops that they know that they can run stop losses down and drive the dollar down against the yen, only to buy more of their position. So in other words, they're already long, and they're long at a good price. They'll sell off a big portion of that position to drive the price down to buy it back again, so that they get a better average. And then they know that in 6 months, dollar yen's going to be much higher. So they have a couple of things working for them. They have the idea that, you know, the dollar yen is going to 160. They're buying, they're getting long. They have, you know, a slight interest rate differential in their favor. And they have an economic wind, or what they perceive to be the economic river behind them, just pushing them along. So that's one technique that very big boys like Citibank and all the big hedge funds do. And sometimes there's a little collusion between them. I didn't say that. I mean, but they sometimes can get together and say, what price are we selling this thing at today, to drive the price down? You know, there's some of that going on. I mean, I'm not going to say that, that's conspiracy theory, but from my old days on the desk, I've seen it happen, and that I was never really part of it. Wink, wink, nod, nod. But anyway, I look forward to seeing you on the next video. Please, if you like what you see, like, subscribe, or if you like what you see, like and subscribe. Hit the thumbs up button so that you can get alerted to when I put out more of this luscious, fabulous, exciting technical analysis. And always remember, enjoy the party, but dance near the door. Cheers.